Hello and welcome to House Lux Estate, your go-to channel for all things business and finance. Today, we're delving into a topic that's not just fascinating, but critical to the future of business: the use of artificial intelligence to predict and prevent financial fraud. In this digital era, businesses face an increasing risk of financial fraud. Traditional methods of detection are often inadequate, reacting too late or missing subtle signs of fraudulent activity. Enter artificial intelligence, a game-changer in the realm of financial fraud prevention. AI's ability to analyze vast amounts of data and identify patterns humans may overlook is revolutionizing the way businesses protect their financial interests. For business owners, understanding how to harness this technology is no longer a luxury, it's a necessity. So, whether you're a tech guru or a novice, our discussion today will offer valuable insights into the world of AI and financial fraud prevention. Let's dive into the exciting world of AI and its incredible impact on financial fraud prevention. Firstly, it's crucial to understand what AI is and its role in financial fraud detection. AI, or artificial intelligence, is a broad term for systems or machines that can mimic human intelligence. This can range from simple tasks like recognizing patterns to more complex tasks like making decisions and understanding natural language. AI operates on algorithms, which are sets of rules or processes followed by the system. It learns from data inputs, and over time, it improves its performance based on the patterns it identifies. This is known as machine learning, a subset of AI. Now, how does AI play a role in detecting and preventing financial fraud? Well, financial fraud is a significant issue for businesses worldwide, costing them billions of dollars annually. Traditionally, detecting fraud relied heavily on human analysis and intuition, which, while effective, can be time-consuming and prone to errors. Here's where AI comes in. With its ability to process vast amounts of data at high speed, AI can identify patterns and anomalies that might indicate fraudulent activity. For instance, an AI system can analyze thousands of transactions in a split second, highlighting any that seem unusual based on historical data. This could be anything from a sudden large purchase to transactions happening at odd hours. AI can also predict future fraudulent activities by analyzing past data and identifying patterns that led to fraud. This predictive capability allows businesses to act proactively, stopping potential fraud before it happens. Moreover, AI's machine learning capabilities mean that the system becomes more accurate and efficient over time. Now, let's move on to the step-by-step process of using AI to predict and prevent financial fraud. Imagine this process as a journey, one that starts with data collection. In the world of AI, data is the fuel that drives the engine. The first step is to gather as much relevant data as possible. This could include transaction histories, customer behaviors, and previous instances of confirmed fraud. Remember, the quality of your data is just as important as the quantity. Clean, well-structured data is crucial to train your AI model effectively. Once we've gathered our data, we move to the next step, data analysis. Here, we examine the data to identify patterns and trends. This is where we start to see the story that the data is telling us. We might uncover certain behaviors that typically precede a fraudulent transaction or identify patterns that suggest a customer is more likely to commit fraud. With our story in hand, we proceed to the next step, model training. This is where we teach our AI model to recognize the patterns and trends we've uncovered. We feed our model the data, allowing it to learn from it. With each piece of data, the model improves its ability to predict fraudulent behavior. It's like training a dog to fetch, only instead of a ball, our AI is fetching potential instances of fraud. Once our model is trained, we need to test it. This is where we challenge our AI model with new data it hasn't seen before. We want to see how well it can predict fraudulent behavior based on its training. Think of it as the final exam after a semester of studying. The goal is to ensure the model can accurately identify potential fraud in a real-world scenario. When we're confident in our model's ability to predict fraud, we move to the next step, deployment. Here, we integrate our AI model into our business systems. It's like adding a new member to the team, one that works 24/7, tirelessly scanning transactions for signs of fraud. However, our journey doesn't end with deployment. The final step is continuous monitoring. We need to keep a watchful eye on our AI model to ensure it continues to perform as expected. We also need to update our model as new data comes in. Remember, fraudsters are always evolving and finding new ways to commit fraud. Our AI model needs to evolve too, staying one step ahead of the fraudsters. Following these steps will enhance your business ability to detect and prevent potential financial fraud. To better understand this, let's look at some case studies of businesses that have successfully used AI to prevent financial fraud. Our first case study takes us to the world of online retailing. E-commerce giant Amazon has been at the forefront of using AI to combat financial fraud. Fraudulent transactions were causing major losses and tarnishing their reputation. In response, Amazon developed a machine learning system that analyzes hundreds of data points for each transaction. Everything from the buyer's location, to the time of purchase, to the type of item being purchased is scrutinized by the system. The AI can detect patterns that human analysts might miss, and it gets better with each transaction it analyzes. The result? Amazon has managed to drastically reduce the number of fraudulent transactions, saving millions of dollars each year. Next, let's turn to the banking sector. Many of us are familiar with JP Chase, one of the largest banking institutions in the world. They've implemented an AI system known as COIN, which stands for Contract Intelligence. This system uses natural language processing to review documents and detect potential signs of fraud. Before the introduction of COIN, this process was manual and time-consuming, often resulting in human error. With COIN, JP Chase can review thousands of documents in seconds with a much lower error rate. This has not only saved the bank a significant amount of money, but has also made the process of detecting and preventing fraud much quicker and more efficient. These case studies demonstrate the effectiveness of AI in preventing financial fraud. It's not just about saving money, though that is certainly a major benefit. It's also about maintaining trust and reputation, which are crucial in today's business world. As we can see, AI isn't some far-off, futuristic concept. It's here, it's now, and it's making a major impact in the fight against financial fraud. These case studies demonstrate the effectiveness of AI in preventing financial fraud. Let's recap what we've learned today. We started off by understanding AI, its capabilities, and its role in financial fraud detection. We learned that AI is a powerful tool that can analyze large volumes of data in a short time, identify patterns, and make predictions based on these patterns. Then, we delved into the step-by-step process of how to use AI in predicting and preventing financial fraud. This process involves data collection, training and testing the AI model, and finally, implementing it in real-world scenarios. We also discussed real-life case studies of businesses that have successfully used AI to prevent financial fraud. These examples demonstrated how AI can be an effective tool in securing your business finances. In conclusion, AI is not just a buzzword in the tech world, but a practical tool that can safeguard your business from financial fraud. Thank you for watching. Remember to subscribe to House Lux Estate for more insightful videos like this one. Till next time, keep your finances secure with the power of AI.